Gold prices picking up a little bit of momentum after yesterday's trade and settle above 1,300. Of course, the first time we've settled above 1,300 in gold going back to June. So obviously we've seen a lot of trade lower. The market looked like it was going to get beat up. Rates were going to go higher. The Fed was in play. The economy was booming. And then things changed. And the dollar, which had been strong, started to get a little weaker. Didn't necessarily plummet, but didn't stop going up. Gold started to find a lot of favor, given the fact that you still have a lot of key events, whether it be China, whether it be future Fed policy, whether it be Brexit. There's a lot of what ifs out there, and gold really started to look mispriced when you were talking about it down below $1,200 an ounce, and now we're back above $1,300 an ounce, likely on our way to $1,350 in the coming weeks. I look at this from a technical momentum. Gold is a very emotional commodity like oil, and it trades with a lot of enthusiasm. And right now it's pushing to new highs and probably will continue to extend those highs until an event tells it not to, or until you start to see maybe some profit taking, which we haven't seen yet on this rally. And if you look at the dollar, yeah, it was down a little bit today, but it was more of a non-event. And it has been a non-event for a few weeks here. It's just been trading very much sideways, finding really only any favor against the pound, given the fact that the UK is still not sure how it's going to handle its Brexit come March 29th, and that is to be seen. But I think right now the sideways trade in the dollar may be more reflective of what is the Fed going to do? What is policy going to do? Is it going to get tighter? Is it going to get easier? And I think ultimately the market's now finding maybe it's going to become easier policy. Even without a tightening, it will be easier if they keep their balance sheet more bloated than originally thought. And I think lastly, if you look at gold, where are those positioning numbers that we've been waiting for? Well, the government shutdown is over. We are going to get those positioning numbers, but not until after the 1st of February. And it probably won't be caught up fully for another several weeks after that. So right now, positioning, you can probably bet your bottom dollar that these buys that we've seen above 1,300 are new longs. I don't necessarily think they're shorts getting stopped out. I think they're new longs, and they will continue to push this higher until we meet some resistance, or until the dollar turns around, or until the Fed tells us that they're going to tighten and not ease, or something happens in Fed land this week that would certainly be adverse to gold. But right now, defensive players are buying gold with the idea that the Fed is probably not going to be raising rates, at least in the first half of 2019, but likely the way the market's pricing it, not at all in 2019. So gold right now very reflective of an uncertainty in the market, whether you talk about China, the US, the Fed, Brexit, and Europe, all across the globe. And I think it's basically been your best flight to quality commodity aside from treasuries.